Good morning, everyone. This is Daily Trading Analysis with the weekly recap for this week, which has been one hell of a ride. President-elect Donald Trump's primary focus includes rebuilding the US economy and putting America first. We all know that, but tariffs are being a key tool. He has proposed a 10 to 20% universal tariff on all imports and a 60% tariff on Chinese goods, which could lead to inflationary pressures by increasing consumer costs. Trump's policies are also expected to favor deregulation and tax cuts, which has been historically benefited by the stock market. This includes a lighter regulatory approach for banks, potentially boosting their profits. Additionally, the semiconductor sector might see mixed impacts with potential disruptions in global supply chains due to trade tensions with China. While the regulation and tax cut could benefit semiconductors companies domestically, tariffs on Chinese goods could increase cost and disrupt supply chain, affecting the overall performance. Now that we have some kind of policy in the background, let's review the economic data for this week, which has been really interesting. The S&P Global Composite PMI for October showed moderate growth in the private sector, slightly up from the previous month but below expectations. The services sectors also experienced a minor slowdown, with the S&P Global Services PMI slightly decreasing. However, the ISM Services PMI indicated stronger growth than anticipated, driven by higher business activity and employment. Despite a decline in business activity, within the services sector, employment saw a significant increase, signaling expansion. New orders in the services sector show a slowdown, which could impact future business activity. Price pressures in the services sector eased a bit, indicating potential relief for inflation. In terms of housing markets, mortgage rates continue increasing, reflecting higher borrowing costs for home buyers, and this rise in rates contributed to a significant drop in mortgage applications and overall mortgage market activity. Refinancing also decreased, making less attractive due to these higher rates. Labor market showed a slight increase in initial jobless claims and basically indicating a marginal rise in unemployment. However, the 4-week average of jobless claims decreased, suggesting an overall performance in the overall market trend. Productivity growth was moderate, while labor costs rose, indicating potential inflationary pressure. This is a constant throughout all the week. Inflationary pressures. Consumer sentiment improved, reflecting increased confidence in the economy. Long-term inflation expectations rose slightly, while short-term inflation expectations decreased, indicating easing concerns about immediate price increase. We all know the FOMC rate decision 0.25, but I think in this circumstance in which Trump won the election, we have to really take a little bit step back and wait to see how the rates are going to progress in the path moving down, because Trump is going to affect these rates, certainly. So the policy from the Fed is going to really be affected until next year. And we will have to see the analysis. Right now, I'm not going to provide detailed analysis, and I'm going to go straight into the stock market to really see, first show you something really interesting. Here we have, let me just adjust this a bit. There we go. So basically here we have consumer discretionary booming. This is in the last week, by the way. 5-day performance. Consumer discretionary is up here 7.50%. Energy pushing. And then we have semis 6%. We have technology 6%. And we have financials 5.50%. So basically all the big gainers this week are risk on assets. Consumer discretionary, semiconductors, technology, financials. This is Trump's legacy and Trump's core policy being in the market. And as you can see down here, we have staples, we have utilities, healthcare. All these are defensive sectors. So they are not performing as much as risk assets. So this is the environment in which we are moving right now. Let's go to the futures. Let's go to the markets to really see how things developed, because this week has been pretty wild. Trump's pro-business stance favors deregulation and tax cuts, which has driven major indices like the Dow, the Nasdaq, the S&P 500 to record highs. The S&P 500 crossed 6,000 for the first time ever and posted its largest post-election day ever, 2.53 in a day. Wow. Corporate tax cuts are expected to boost even more the company profits, creating a very bullish environment for long-term investments and day trading opportunities. So we have the Nasdaq, we have the ES in futures, but don't forget about crypto. Crypto is basically backed by Trump. Trump aims to position the US as a leader in crypto, planning a favorable regulatory environment. Bitcoin hit a new record high at 77,270, and the altcoin market cap surpassed 1 trillion. Trump's administration's support for digital assets is promising for crypto investors and day traders. This is another risk-on asset which is booming. But don't forget about US, America first, dollar. It's also seeing a lot of strength. Trump's win has strengthened the dollar, marking its best day in 4 years. This day right here, 1.61, was the best day in 4 years. However, proposed tariffs could impact international trade dynamics, potentially leading to inflationary pressures. This is the concern everywhere. Perhaps not for him, perhaps not for US, but this is going to affect inflation for sure. So more analysis in terms of overall trends. It was a wild week with bulls running the show. Let me just show you the NQ. Bulls are in control in this market. And it feels like we are back in 2020-21 environment. Some notable moments for this week was basically the 6,000 for the ES. That's critical. Every major index hit new all-time highs, except the Russell. Russell 2000, it's a little bit behind, but look at this gap. Look at this gap. It's a little bit behind because it just crossed the mark from 2021. We got 2021 pullback, and then since October, that low, it's been a crash. It's been beautiful for small caps. Are a little bit behind, but remember, the S&P biggest day after election, Bitcoin new all-time highs, market cap of 1 trillion, magnificent 7. We have, look at this, we have these dailies. Look at Amazon. Amazon broke all-time highs. Nvidia replaced Apple as the most valuable company in the world with 3.62. Let's adjust this. Excuse me. Yes, this. Okay, there we go. So basically, it's just booming. Nvidia 3.62 trillion in market cap. And Tesla, don't forget about Elon Musk. Tesla soared 29% following Trump's victory. And this makes basically the S&P 500 company profits rose 8% year over year in Q3 versus the expectations of 3%. Unbelievable. So this is basically the overall summary I wanted to share with you, in which we review Trump's policies, Trump's stance on economy, and why we are seeing this. Now that we understand how the market is moving and why the market is moving, it is our turn to really see convergences and divergences. Before that, let's analyze how we ended the week in the lower time frames. As you can see, Thursday was really, really beautiful. We got a trade around here in pre-market, and we didn't take the trade into all-time highs. We took the trade into the previous 1 hour level that it had at 127.21. Beautiful. So what I was expecting in pre-market was on Friday was a little bit of a sell-off to better levels and try to find that level that gave me a beautiful risk. It was Friday. We all have to take into account that Fridays are usually take profits day, and ahead of the weekend people closes their positions because they don't want the uncertainty. Maybe Israel attacks Lebanon again, and some weird thing happens, and people, investors, traders want to minimize their risk. But that doesn't mean that day traders, we cannot take opportunities with good risk rewards. So I was watching basically my premise was pull back into the previous level here and then try to find some setup, algo setup into an inverse, a V-shaped reversal. That was my plan, but that's one thing. And another thing is just to have the setup. And the setup was pretty decent. We had on the 30-minute chart, we had this pivot and this discount array. And basically the orange dashed line was my main level. I wanted that to basically hold and take the opportunity to really have, let me show you, to really have this zone here into account. So that was, I think it was a 1 minute fair value gap into Thursday with the discount array. So we tapped in here and we never looked back again. So that was converging with the previous dash line. So it was this zone down here. And as soon as I got this, I was really focusing, watching the price action, watching the data, watching the time on sales to really see if we got any big orders. Down here, it looked like accumulation, a little bit of bottom, and then displacement. This candle provides me at least some kind of anchor to minimize my risk. 11 points of risk, that's my ideal way. Sometimes yesterday I took a 20 something risk. Sometimes it's even 6, but 11 it's quite good. 1 to 4 risk reward ratio. And the thing here was that it was too much of a sell-off. I was not super confident on having a complete V reversal. So I decided to take these inverse, these consequent encroachments as the target. Remember, lower hanging fruit. We have to be conservative sometimes. And if we have the opportunity to take 40 points out of the market, just go ahead and do that. And don't look back. Don't let anyone tell you that 20 points, 10 points, 30 points are not good. You don't need 100 points to really make a living out of this. You know my trades, you know my setup, you know my strategy, you know my concepts, you know everything about the way I trade. I always show you the same. We didn't have an inverse. We didn't have an order block. Perhaps this, but it was not super clear. I was just really expecting this. But we had a little bit of displacement and look at this, the imbalance. So I included that imbalance into my risk profile for this trade. So that's why my stop is down here. And I took the first pullback onto that. And I just let it work, let it work, let it work. And I got my opportunity here. Right here, I was really confident that I could just put my stop here. I got filled here by 1 tick. Anyway, we got the push and then we started changing trends. That's what I was not feeling comfortable. Perhaps we are going to do things like this and then rip. But if you see the price action after the open, you can see the choppiness. Obviously, it's bullish. We ended up with higher lows everywhere, higher highs, but this is not the same price action as, for example, Thursday. So it was Friday, and with this trade, that ended my week. Pretty damn good week. Really, really happy with how things turned out with Trump, even though I don't agree with some of his policies. The market is answering, the market is showing me something that I'm interested. So politics apart, I'm going to trade the price action. And if you see this, there's a 15-minute inverse that I was also checking. And it was pretty interesting to really see how the 15 minutes was super choppy. The narrative was quite strange. And we finally, look at this, we finally took the pre-market highs and then we pulled back. And it was a flat day for the end. But remember what I said about the dollar, about crypto, about Asia, about semis, about technology, about banks, because this is a new era of Trump. 4 years are going to be huge for the US stock market unless something big happens. But remember, the top of your head, top of your mind, inflationary pressures are going to go higher. And that's something we have to take into account. But for now, the bulls are in control and making huge moves. Looking ahead, it's unclear what the catalyst is going to be to break up this momentum. I don't know what can destroy this kind of sentiment. As 2021 and 2020 taught us, when everything is working, it is often a good time to review your plan and ensure that you know what to do when this is going to pull back. You have to have a plan. This is not just buy. Don't lose your focus. This is a huge move, huge, but needs some kind of pullback. I would expect some kind of pullback and then continuation. The market does not do these things all the time. So, in summary, remember, Trump's policies are creating a bullish environment for both the stock, the crypto, the dollar, the semis, the banks. So, welcome to a new era of bullishness, but don't forget about the inflationary pressures that may. That's all from my side. As always, thank you for your time. If you found this video useful, please give it a like, subscribe to the channel, because I upload videos like this one every single day for market forecasts, market updates, and market recaps. I appreciate your time as always. Remember that the trading day, it's over. We finished the week. We finished the big catalyst, and this is a weekly recap, and I expect you to stay informed, stay on top of news, but overall just disconnect a little bit this weekend, rest a bit, and do your own thing, and let's come back on Monday with more trade, waiting for new opportunities. Stay safe everyone, have a nice weekend, and see you on Monday.